Hi friends, Namaste. I am Chandrakanth. Welcome to Mr. Chandrakanth YouTube channel. In this video, we will learn about what is account, what are the main sources of accounts, what are the types of accounts, what are the golden rules of an accounts. So we will discuss these four concepts. Please watch until last minute so you will get some knowledge. The first concept is what is an account. So in accounting, the account is an art of recording, classifying and summarizing financial transactions in a significant manner and interpretation of a financial result thereof. So in accounting, the account is an art of recording, classifying, summarizing financial transactions in a systematic manner and find the financial results. So an accountant must be a good understanding of the terms of accounting and types of accounting and concepts of accounting. So accounting knowledge is very important for the accountant before going to prepare the financial statements. An account is an art of recording, classifying and summarizing the financial transactions in a systematic manner to ascertain the financial position of a business. So for every type of a business, so any type of a business, whether it is small size business, whether it is large size business, to maintain the book of accounts, in a systematic manner of a business operations. So in account, there are 5 main sources of accounts used in accounting. Each of these sources represented in expanded accounting equation. So in accounting, there are the 5 main sources. So 5 main elements. So by using these 5 elements only, so the entire accounting concept will run. So these 5 sources or elements called assets, liabilities, owner's equity, revenue and expenses. So these 5 elements so expanded as a equation. So assets equals to liabilities plus owner's equity plus revenue minus expenses. So these 5 elements as an 5 main sources or elements of an accounting or account. So we will discuss each of these elements. So here under the 5 elements, so assets, liability and equity comes under balance sheet. Assets, liabilities, equity will prepare the statements in balance sheet. Whereas incomes or revenue, expenses or expenditure will recorded in profit and loss statement. So here asset means the cash or resources owned by the company. Any asset, tangible asset or intangible asset owned by the company, this is called assets. So these assets also includes account receivables and inventory. And second one is liabilities. These liabilities owned by the company. So these liabilities owned by the company, we need to pay in future. Whatever the debts owned by the business, those debts will paid in future. That is called liability. This includes accounts payables and loans. We need to pay these loans and accounts payable in future. That's called liability. Third one is revenues or income. So these revenues or income, money earned by the business. So these revenues or incomes earned by the business. This includes sales of a product or sales of a services or other interest incomes. So these incomes will receive or we earn by the business. That's called revenue or incomes. Fourth one is expenditures or expenses. So expenditures or expenses we paid means cash flow outside of the business. So suppose if you purchase anything, we need to pay cash. That's the outflow of a cash. That's an expenditure. This includes salaries payable or utilities. Okay, salaries payable or office expenditures payables. This is called expenditures of a business. So on number 5, equity. Equity means liabilities minus assets is called equity. Okay, whatever the liabilities available in business minus what are the assets available in business. So liabilities minus assets equal to equity. So this is an equity means capital of a business. Okay, this represents the owners held interest in the company like stocks and retained earnings. So these are the 5 main sources or elements of a account. The account is a T-shaped form. So generally account look like a T-shaped form. In T-shaped form there is a debit and credit is there according to the double entry system. So every transaction having a 2 elements, one is debit and credit. So here T account represent, so debit is the left side of the account and credit is the right side of the account. So account is a T-shaped form and credit and debit is there. So debit is for left side and credit is for right side. So what are the types of accounts? So in accounting, so there are the 3 types of accounts. One is personal account, real account and nominal accounts. Based on these types of accounts only, so we will prepare the book of accounts. Based on these 3 types of accounts only, we will prepare the financial reports. Okay, so we will discuss what is real account, what is personal account, what is nominal account with the rules. So what are the golden rules of a accounting also? The first one is personal account. So these personal accounts which are either directly or indirectly related to individuals, companies, firms or organizations are known as personal account. So personal accounts deals with directly or indirectly related to persons, individuals means persons, companies, firms and organizations. Examples of personal accounts include Kumar account, XYZ Private Limited, capital account, prepaid account, bank account, creditors accounts, debtors accounts, suppliers accounts. These are accounts related to individuals, companies and firm names. So is known as personal account. So what is the golden rule of personal account means? Debit the receiver and credit the giver. Okay, debit the receiver and credit the giver is the golden rule of personal account. So the example of personal account. So we will see the example of personal account. Jane was paid 35,000 rupees in cash. So the transaction is Jane was paid 35,000 in cash. So the rule of personal account is debit the receiver and credit the giver. The rule of personal account is debit the receiver and credit the giver. In above transaction, Jane was paid 35,000 rupees in cash. Here, 2 elements is there. One is Jane and another one is cash. So Jane means is the person name. So Jane is person name. So it comes under personal account. And another one is cash. Cash is means referred as a real account. So this is the personal account example. And second one is real account. Real account means any kind of assets. Any kind of assets which is either tangible assets or intangible assets which fall under real account. Any kind of assets either tangible or intangible fall under real account. So the tangible assets means land, stock, buildings. That's called tangible assets. Intangible assets means goodwill, copyright, patent rights. Okay, these are the tangible assets and intangible assets. So these tangible assets and intangible assets will fall under real account. So what is the golden rule of real account? So the golden rule of real account is debit what comes in and credit what goes out. So the real account rule is debit what comes in, credit what goes out. So example of real account. So example of real account. Joy purchased furniture of rupees 75,000 rupees. Okay. Joy purchased furniture rupees 75,000 for cash. Here the rule of real account is debit what comes in, credit what goes out. Here we need to identify the two concepts. So Joy purchased furniture. Furniture is an asset. So the furniture was comes in and cash payment. So cash is goes out. Here the transaction was, so the furniture account data to cash account. The furniture is the real account, cash is the real account, because these two are furniture and cash is an assets of a business. The furniture asset is coming and cash asset is going. So this is the real account rule. And third one is nominal account. So the nominal account means those accounts which are associated with incomes, gains, losses or expenses. So nominal account, those accounts which are associated with incomes, gains, losses or expenses are known as nominal account. So at the end, the remaining whatever the balances of nominal accounts are then posted in capital account. So the nominal account which are associated with incomes, gains, expenses and losses. So the golden rule of nominal account is debit all expenses and losses and credit all incomes and gains. The golden rule of nominal account is debit all expenses and losses, credit all incomes and gains. So we will see the example of nominal account. So here the transaction is salary or wages. Rupees worth 28,000 was paid to Mr. Shah in cash. So here salary is paid to Mr. Shah through cash. Here the golden rule of the nominal account is debit all expenses and losses, credit all incomes and gains. So here in this transaction, the salaries payment was expenditure of a business. Okay, the salaries payment, expenditure of a business. Here the two elements is, one is salary is as a expenditure, cash is an asset. So salary is an expenditure, we paid cash, that is an asset. So here as per nominal account, so expenses are, so here we need to debit the expenditure. Salary account we need to debit and cash payment is there. Cash means then asset. So asset is goes out. So we need to credit the cash. So the entry is salary account data to salary account data to cash account. Salary is an expenditure and cash is an asset. So these are all about the what is the account and what are the sources of accounts and what are the types of account and what are the golden rules of account we discussed. I hope this video will help you in the future also. Please like, share and subscribe my channel. Thank you friends.